Welcome back. I'm Pratap here. Today is the 21st March 2024. In this video, let us generate a NIFTY supply demand zone chain and we will analyze NIFTY chart. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos I kept in a playlist, supply demand zone price action course, at our NeoStock YouTube channel, and also I have provided the link to this playlist in this YouTube video description. If you click the link, you will get into this page and then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training videos are available in an order. So please go through all these lessons one by one and strengthen our skills related to supply demand zone price action. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we release a new video, we'll provide an update in that channel. Now let's get into the analysis of a NIFTY chart. Lot of interesting things happened today. Today we have witnessed a fight between pro-gap areas from demand zone and supply zones. If you look into before today's chart, this was the pro-gap area for supply zone. See here, this was the last candle that filled the gap after the gap is opened. And till today, trading started. All the supply flow order is there inside this pro-gap. And today what happened? Institutions again created, this time bulls created the pro-gap. Earlier this pro-gap was created by the bears. Today bulls created the pro-gap from here and until this candle. This is today's morning 9:15 candle. I'm sorry. See this pro-gap. And sometimes there is a fight between this supply pro-gap and this demand pro-gap. There was a fight. It was a question who is going to dominate. And at some point of time, bulls dominated the compared to the bears. And after some time again bears took the control, and at the time we got a trade and also we got the profit that we will discuss. So let me delete these arrow marks. Okay. See, today morning what happened? NIFTY opened with a pro-gap. It created the demand zones at several time frames. We'll look into that at later stage. First, with this pro-gap, this 5 minutes high liquidity zone is completely wiped out. First of all, we didn't get it. See, yesterday prices went near to this. With some entry buffer, we got a trade and we got a good profit yesterday. But today, prices not even entered into this zone. Market itself is opened above this. That means this entire 5 minutes high liquidity zone is gone. And finally what happened? This is the place where market is opened because supply is very strong here. And supply holded for some time. It has given resistance and tried to consumed some of the institutional buy orders in this program because gap is started up to here. Later on in the gap, the demand is consumed, but the power of the supply is not good enough to push the market down. It's not good enough. Demand is such a strong. And then once the supply is consumed, now demand is dominated and then it started moving up. See here, it created a rally candle, base candle and a rally candle and now prices entered into this zone. Can we take a trade because this is a high liquidity zone? Generally, high liquidity zones are very strong. We are supposed to take a trade here. I know some of us, especially who are in the learning stage, you make mistakes. That's why I got doubt immediately in our Telegram group. I sent a message. Don't take trade in this zone. The reason is there is no RR. When you have to take the trade, there is a good RR. Here the RR is something like 1:1.7 or something is there. You need a minimum 1:3 RR. If you are a beginner, always prefer 1:5 RR. That is what we say, safe side. So that's why immediately I stopped you people not to take this trade in this zone. We are not supposed to take a trade here. Even though it is high liquidity zone, RR is not supported. That's why risk management is very, very important. That is the reason why I always talk about the risk management. If you look into the position size video we released during this week, I think last Monday, if I am not wrong, clearly we discussed several risk management related concepts in that. If you did not watch, please watch that video. It's very important. Okay, anyway, we avoided taking trade in this zone. And next we have another high liquidity, 5 minutes high liquidity here. This is a 5 minutes high liquidity zone. And this 5 minutes high liquidity zone, price is approached. The moment I have seen the risk is minimal and you have 1:5 RR is there from here to here. So immediately, but their high liquidity zones point of view, trade setup point of view, I send the message, high liquidity trade setup point of view, mostly we look for a profit in 15 minutes. Target is at 15 minutes. Exactly same area, 15 minutes is also there. Whatever you are seeing 5 minutes, same area, 15 minutes is there. When I calculated from here to here, so we have more than 1:5 RR is there. Then I recommended the people, there is a 1:5 RR. I informed. Because it is up to you to take the trade or not. I should not suggest you the trades. But the moment I told that point means, people, whoever trust these high liquidity zones, they can take a trade. So that is what, those whoever got the trade, after that, there was some kind of resistance from the demand. There was a fight between demand and supply here. But this is a seller's area. Obviously, sellers has to take control. So once again, prices pushed into this 5 minutes high liquidity zone. Those who missed, because by the time I sent the message, prices might have come down a little. So you got another opportunity. Definitely you should not miss here. Those who have taken a trade here, see ultimately prices reached this target. This is the way Nifty has given around 58 points profit. And after that, further it came down. Then again, throughout the date, there was a fight between bulls and bears within this narrow range only. Okay. So this is the way we got a successful trade today. Because Nifty has given around 2.3 or 2.4 ROI it has given. Over 2%. The only thing is, this is the area we didn't take just because our risk management is not supported. RR is not supported. That's why those people who are not concentrating in RR, it is very, very important. RR plays today, RR, risk reward, only saved one trade that would have been failed. Generally, you know why RR is important? RR is less means very close to your entry zone, there is an opposing zone. Here your entry zone is supply zone. Opposing zone is demand zone. If demand zone is very close to the supply zone, there are higher risks for your trade. If demand is strong, what happens? Your zone will be violated. That is what happened in this case. But in the next scenario, you have 1:5 RR is there. That way you saved your trade. So this is about Nifty 50, what happened in today's session. The most important, because these kind of things rarely we witness. What is that fight between one pro gap with another pro gap. That means demand pro gap with supply pro gap. Such kind of fight you see rarely. So today we have seen such kind of incident. Now let us look into the new levels, but before that let me delete the levels that has been violated today. This is the one. This is a 5 minutes high liquidity supply zone. Inside 15 minutes high liquidity supply zone. So this is completely gone. So this is a 5 minutes high liquidity supply zone. Here also we have one 15 minutes high liquidity is there. 15 minutes supply zone is there here also. Not sure it is high liquidity, but this entire area is 125 and 75 minutes high liquidity supply zone. And today what happened? Today the things are happened from 75 minutes time frame onwards. Things are changed from 75 minutes time frame. So look into this Nifty supply demand zone chain for 75 minutes time frame. Today is the 21st March, right? Look into this zone. A new 75 minutes demand zone is created today. It is not a high liquidity zone, but it is having a lot of importance. The reason is this zone is having pro gap, a leg out with gap. So let me go to the 75 minutes time frame. Time being, let me delete these levels because they are changed. We need to draw the new levels. See here you have a ERC candle as a leg candle, you have a base candle, and you have a leg out candle with a gap. You will be adding hidden body. If you are not aware of hidden body concept, please look into lesson 9. There I explained about hidden body and hidden candles. Hidden zones, not hidden candle, hidden zone. That's a very important concept. Those zones many times they work well. So this is a zone having hidden body. So this is a leg out is having hidden body. It's a huge leg out, high explosive leg out because of the pro gap area. And this is a 75 minutes demand zone, normal demand zone. But why we are marking inside, there could be high liquidity zones will be created inside this. First let us add the text. This is a 75 minutes demand zone. Now again a new level is created today for our trading range point of view. See how this daily demand zone is acting, because it seems institutions don't want to let this demand zone violated easily. They don't want to let violated easily. That means a fight is happening between bulls and bears now in the market. Bulls also wants to dominate. Already bears, see how strong they are. Now bulls are not giving up easily. Now they set all the new things today, new order flows they created, and this is the new 75 minutes demand zone is created just above this daily demand zone. And a lot of order flow with the pro gap area. We have witnessed today how it is dominated today in the supply. It completely wiped up the entire pro gap of the supply. Now there is no more pro gap for this supply zone. All the order flow is gone. Prices entered more deep inside this zone also. Now this is the only order flow left out within this high liquidity supply zone. If tomorrow also if bulls dominate, who knows, this can be violated. That possibility is there. Maybe tomorrow bears may add new order flows and further push it down. That possibility is also there. But one point you have to understand, prices will be moving narrowly in this range only until one of these zones are violated. Because both are fighting equally. You already learned in your first lesson. Prices will be moving in a narrow range when there is equal demand and supply. Lesson 1, this is the most important point you learned. Okay, now 75 minutes zone we have drawn. Now let us generate supply demand zone chain for next time frame, that is the 25 minutes time frame. Now 25 minutes chain is created, and today here two zones are created today, 6th and 7th. 7th is a high liquidity zone, S underscore DZ. We've been waiting for high liquidity zones here. S, when it is created, today morning 9:15 candle, leg out. So yesterday 13:25 they created the leg in candle. After that 4 base candles. So let me move on to the 25 minutes time frame. This is 25 minutes chart. This is the one, 13:25. We have a leg out drop. You have 3 base candles, and then you have a rally candle. That means this entire 75 minutes demand zone is also a 25 minutes high liquidity demand zone. So 75 minutes demand zone, comma, 25 minutes HLQ demand zone. So this 75 minutes entire area is occupied by 25 minutes also. So that's a very good point. Okay, good. What else we have? We have one more demand zone, normal demand zone. Not demand zone, I'm sorry, it is supply zone. The next one is supply zone. The 6th. The supply zone, 25 minute supply zone is created. It's a normal supply zone. 21:3 9:15, 21 11:45. Today at 11:45 we have a leg out. So this is the one. This is a leg candle. We have 1, 2, 3, 4. This is a 25 minutes supply zone. This is the one. Now prices are within this zone, but anyway, let's don't give importance to this. Lower time frames there could be a high liquidity zones. We can draw those supply zones, if any. The point you need to understand, institutions also, they are creating new zones. That is the point you have to understand. They are not letting the demand dominate here. So that means today institutions added a new order flow in this area. Lower time frames will get clarity. So now I am moving to 15 minutes time frame. So this is the 15 minutes supply demand zone chain. Are there any 15 minute zones created? 5th is the recent supply zone, 6th is the recent demand zone. Yeah, these two are created today only. 5th and 6th are created today. 5th, they created a high liquidity supply zone. And 6th is a normal demand zone. Probably this is a fine-tuned inside that 75 minutes, but we will draw the fine-tuned because that is very important. Which area they fine-tuned? 13:45 candle on 20th, 13:45. Let me change to 15 minutes. We have a drop. 1, 2, 3, 4, 5, 6. So this is the 15 minutes area. This is the normal 15 minutes. This is the fine tune. Because you all know how to do fine tuning the zone. Because anyway we need to fine tune to check the quality of this zone. Without checking the quality of the zone, because it is high liquidity, blindly you cannot take trades. Mostly you are supposed to do this work. My goal is to let you know where high liquidity zones. How good they are, you have to do it by fine tuning the zone. But still I am spending some time here for you people to support. In case if any of the learners are here, it might be helpful to you. And we have a high liquidity 5 minute supply zone. This is the one we need to concentrate. When it is 21, that means today at 11:30 candle, after that one base candle. This is 11:30. So that means this is a high liquidity supply zone they created here. But prices went deep inside. Probably, who knows, tomorrow it might be turned out, or maybe tomorrow institutions again add new orders in this area and push the prices down. That possibility is also there. But one thing is prices went very close to the, but today it holded the prices. That means that much liquidity they added in this. This is 15 minutes, sorry. This is a 15 minutes high liquidity supply zone. The point you need to understand, they added so much liquidity here, and because demand is also very strong today, it is able to hold the demand, not let the prices go beyond this. That means institutions are trying to save this demand zone, supply zone. They are trying to save the supply zone. And another institutions are trying to break this supply zone. They keep on adding the demand. Slowly it consumed. But they added more order flow at the distal line of this particular 15 minutes supply zone, and it is holding the prices. And it went very close to the distal line. Distal line it didn't reach. They went very close. Probably at the distal line area, a lot of order flow is there. See the rejections once prices are entering into this. But majority of the orders are consumed. In case if tomorrow institutions come with huge demand, what happens? This zone will be easily violated. This 15 minutes high liquidity supply zone will be easily violated. And then again it will reach here. How strong this, because today it gave 2 entries. How strong this demand zone we will be knowing only tomorrow. If demand is very strong, who knows, this will be violated. The next demand zone probably it will pick up the orders. Maybe if the order flow is very strong, again it will push up to the next 15 minutes demand zone, we will get the target. Just above that there is a 5 minutes high liquidity supply zone. This will act as a bull trap. Remember, in case if this zone is violated, this will act as a bull trap. Definitely institutions would have kept a very strong order flow in this area. That possibility is there. Remember, this 5 minutes high liquidity zone will act as a bull trap. So this is about institutions, what they created in 15 minutes time frame. Now last time frame 5 minutes. Let us go to the 5 minutes time frame. Now we will get the exact picture after drawing these zones. Any new zones created today? Yeah, here 21, 21, 21. 3 zones are created. 21 means leg out date, I am saying. 10, 11 and 12. These 3 zones are created here. 12th one is again high liquidity demand zone. First let us draw this high liquidity demand zone. When they created, yesterday 15:15 candle, today 9:15 candle. Let me go to 5 minutes time frame. Here yesterday 15:15. So this is the one. That means inside this 15 minutes demand zone, again we have 5 minutes high liquidity demand zone. We have a rally candle, 2 base candles, and today's this entire pro gap area has started from this demand. This is the real institutional order flow they kept here. In this zone, this is the real order flow, institutional order flow. Actually, we've been looking for these order flows. That's why we fine-tune the zones. The main reason behind fine-tuning the zone is finding the real order flows. If you want to place an order tomorrow, this is the area you need to place a buy order in case prices comes here. And moreover, the risk is also low. In case if supply is strong, if it is violated, your loss will be very minimal. But this is a strong order flow, higher chances you may get a success. When it will be failed, only supply dominates this demand. But this is an opportunity for us, trade opportunity this will give. And previous zones we already drawn in the previous videos. And if you have any doubts, please check previous videos how we have drawn these zones. Okay, this is about demand. What about supply? There is one more demand is created. 21/3, 2024, 1450 candle. So here they created a demand zone. This is a normal demand zone only. So you can draw these zones, but at present I am not giving importance to these normal zones. But here we have a demand zone. But who knows, this normal zone could be a powerful zone in the coming days. That possibility is also there. We should not rule out. But time being, this is a normal demand zone. And moreover, it is in the supply area. If supply is very strong tomorrow, easily this zone will be violated because it is a normal zone. So I am not drawing that zone, but anyway, that information is there in this report if you want to refer. And then we have two demand zones they created. This is one. And one more demand zone is also there. 21/3. This is the one we have seen, right? 1225 and 1235. My bad. Not this one. This is 1450, 1220. This is the one. Sorry, not this one. This is the one. Drop base rally. This is the zone. Currently holding. This is a normal demand zone, currently holding the prices here. So that means institutions kept a strong order here today. This is a normal 5 minutes demand zone. For reference, I am drawing. This is not a high liquidity zone. Just 5 minutes demand zone, that's it. It is not a high liquidity demand zone. Why I am drawing? Because today it holded the prices. It did not let the prices go below. That means a lot of order flow institutions added today in this zone. Because we are in the supply, and moreover this entire thing is 15 minutes high liquidity supply zone, which definitely a lot of order flow is added by the institutions. Still this demand zone holded. It means a strong order flow this 5 minutes demand zone is having. How strong we don't know. Today it holded. If tomorrow institutions add a new supply, probably in the morning itself it will be violated, or maybe with gap down prices may come. That possibility is there. Or institutions tomorrow again from here they add a new order flow and a new with a gap up, these zones will be violated. That possibility is also there. If one of these zones are holded, probably intraday they will be helping you to get trade opportunities. Next time, suppose this is holded and all these things are violated. Next time prices come here, maybe it may give you a trade opportunity. Same way reverse. Suppose this is violated, next time when prices enter into this zone, it will give you a trade opportunity. And there is one more demand zone. This is the one. Oh, 1440 is the one we already discussed. So this is also valid, 1414. This is the one. That means institutions, LOTL zone is created. It is not this one. They also created LOTL zone and again pushed. So institutions are trying to build demand in this supply. Sorry for my mistake. This is a valid one. This is a valid one as per this report. This is the one we discussed first. So these are all LOTL zones. Why they are creating LOTL? To hold this zones, because supply is very strong here. They want to hold it. So this is the current picture. And 5 minutes, any supply zones they created? No, the previously created supply zone on the 9th one. On 18th March still remains hold, the 5 minutes level. This is the high liquidity supply zone. $18.3, $14.50, this is the one. So this is the zone, the one we have drawn this zone. At present, this is only the 5 minutes level. Are there any trade opportunities? Here you have a rally, base, drop, 5 minute zone, but already tested 2 times. This is the fine tuned. If you want to fine tune this zone, it is pierced. Sorry, this is also pierced. This zone is pierced, rally base drop, the last candle. That means what we can say, the demand is not really, the supply is not really good within this 15 minutes high liquidity, unless institutions add a new order flow tomorrow. Otherwise, this will be violated. Please remember that point. So what could be the new ranges? The new ranges could be, for tomorrow, most probably this is going to be like this. This is the one, 75 minutes they created, and this is the active 75 minutes within this area. I'm only drawing one possibility for tomorrow. Prices will be moving between this. If this 75 minutes demand zone is violated, this bull trap will activate. In this bull trap, we get good trade opportunity in case if this entire daily zone is violated. It's not that much easy, but we have to look for the opportunity. See today what happened. All of a sudden institutions added the new demand. We never expected. The possibility is there. We never expected so quick they will react today itself. So remember this bull trap. But time being, this is the range. You have a 305 points range from here to here, distal line to distal line. This is the 75 minutes zone newly created today, and this is the 75 minutes zone which is fine tuned inside the daily zone. Currently these two are active. So this is about supply demand zone chain we generated based on our NeoStock software. Hope this information will be helpful to you. So let's all meet again in our next video. Thank you.